A prop firm for real stock traders. Yeah, that's a thing now. Here is everything you need to know about Trade the Pool. Hey, I'm Andy Roberts from FXEmpire.com. This year alone, we've reviewed over 40 of the industry's leading prop firms. This gives us a clear sense of what sets a great firm apart and what should raise red flags. In this review, we're breaking down the key questions every trader should ask before joining a prop firm. Can Trade the Pool really be trusted? And do they actually pay their traders? Are the challenges fair and trader-friendly? Or are there some hidden pitfalls? Is the price competitive, or are you overpaying for the funding you get? Do the rules and trading conditions support your strategy? By the end of this video, you will know exactly whether Trade the Pool is a good choice for your trading. Let's get started. When you're choosing a prop firm, trust should always come first. So how does Trade the Pool measure up? Here's what we found. Trade the Pool was founded by Michael Katz and is based in Israel with an additional office in London. It's also backed by the Fivers, a big and well-established prop firm that's been around for years, which adds some extra credibility. Even though Trade the Pool launched in 2022, it already has a solid Trustpilot rating of 4.4 from about 540 reviews, and 82% of those are 5-star. Most of the feedback is positive, although some traders have mentioned strict or unclear rules. We also saw a few comments about transparency, but in our own review, the trading rules were actually really clear. Profit targets, drawdown limits, news trading rules, weekend holding, copy trading, automated strategies, everything is laid out in detail. For example, bracketing around news events isn't allowed, and high-frequency systems with very short trade durations are prohibited. These are important things to know before you start trading, and the clarity here is one of the reasons we rated them highly for transparency. As for payouts, there isn't any independent third-party data yet, but the firm regularly posts payout updates on its Instagram and Twitter accounts, and the volume looks consistent. All in all, even though it's a relatively new firm, Trade the Pool has already built a solid reputation for reliability and transparency. They also have a strong online presence, around 9K followers on Instagram, more than 9K on Twitter, and 12K on YouTube, with over 1,000 videos. Our trust score for Trade the Pool is 4.7 out of 5. Next, let's go to the challenges Trade the Pool offers and see if they match the way that you trade. Trade the Pool keeps things fairly simple with a one-step challenge divided into two main account types, day trade and swing trade. The maximum challenge size goes up to $200,000 with growth potential up to $450,000. Let's start with the day trade account. There are two versions of the account called Flexible and Disciplined. Both offer a 70% payout split, a 6% profit target, and allow news trading and copy trading. Weekend holding, however, is not allowed. The day trade flexible option requires at least 10 positions, uses a 50% consistency rule, and gives you unlimited time to pass. The disciplined version raises the minimum to 20 positions, uses a 30% consistency rule, and gives you 60 days to complete the challenge. Now, the swing trade accounts follow the same structure, flexible and disciplined, but with rules that suit longer-term trading. Both versions offer a 70% payout split, require at least 5 positions, and come with a 15% profit target and a 7% max loss. Weekend holding is allowed here, which makes sense for swing traders. The swing trade flexible account uses a 50% consistency rule with no time limit, while the disciplined version uses a 30% consistency rule and allows 100 days to finish the challenge. All accounts support automated trading through Signal Stack, which is a great option if you use algorithmic strategies. Overall, Trade the Pool's challenges feel fair and trader-friendly. The profit target and drawdown rules are clear, and the transparency around what's allowed and what isn't is solid. Being able to hold positions overnight and over the weekend is also a nice advantage. The platform supports all trading styles, whether you're scalping, day trading, swing trading, or using copy trading. On the downside, the 70% payout split is slightly below the industry average, and the consistency rules might feel limiting for some traders. All in all, we rated their challenge offering 4.4 out of 5. Now let's talk about pricing. Is Trade the Pool actually good value for money? To figure out whether a prop firm is actually affordable or overpriced, we came up with our own metric called average funding per dollar. It's basically a way to see how much trading capital that you're really getting for each dollar that you pay in challenge fees. The idea is simple. You take the total funded account balance and divide it by the total price of the program. So the higher that number is, the better the value. A lower number means you're paying more for the same amount of capital. It's a really useful way to compare firms because the fee alone doesn't always tell you much. Well, how does Trade the Pool stack up? It's important to say that Trade the Pool is unique in the prop space as it lets you trade real stocks rather than CFDs. This also means it's not exactly fair to compare it directly to standard Forex prop firms. Still, using the same metric gives us a good overall picture of where it stands on value. In the day trade program, the flexible account averages $152.97 per dollar, which is roughly in line with typical Forex industry standards. The disciplined account at $199 is somewhat higher. The swing trade program, on the other hand, comes in below the usual Forex benchmarks. They average $29.78 for the flexible account and $44.63 for the disciplined one. But again, it's not a perfect apples to apples comparison because what Trade the Pool offers is very different from the broader market. One thing to note, the evaluation fee is non-refundable, even if you pass the challenge. The only exception is if you request a refund within 14 days, haven't placed any trades, and haven't breached any terms. Overall, we rated Trade the Pool's pricing 4.6 out of 5. Okay, and what about the trading conditions? Let's take a close look. Trade the Pool offers a single raw spread account with tight spreads and a commission per lot on stocks, warrants, ETNs, ETFs, and ETPs. This setup works well for day traders and scalpers who rely on raw pricing. Spreads are truly competitive. In fact, all major US stocks come in better than the industry average. The commission is 75 cents per execution for orders up to 150 shares, and for anything above that is $0.005 per share. One really nice advantage is that Trade the Pool doesn't charge swap fees for holding positions overnight, so you can keep trades open beyond the session without extra costs. There's also a huge variety of instruments, more than 12,000 stocks and ETFs, which is exceptional for a prop firm. Now, Trade the Pool offers different levels of buying power depending on the account type. For day trading, buying power ranges from $5,000 to $200,000, and for swing trading, it ranges from $2,000 to $40,000. When it comes to platforms, Trade the Pool gives you access to Trader Evolution. It delivers fast execution, clean and easy navigation, and advanced charting. It also supports both manual trading and automated strategies through Signal Stack, so it's suitable for traders at all levels. Trade the Pool also includes a growth plan. Once your account becomes funded, every 10% profit increases your buying power by 5% and raises your daily pause limit by 10%. If you keep hitting those targets consistently, you can scale up your account and grow your buying power to as much as $450,000. Now, there are a few limitations worth mentioning. Some trading styles are prohibited, including trading a stock that's being halted, trading highly volatile stocks that have moved more than 8% in the last 4 regular trading minutes, trading stocks with daily volume below 200,000 shares during regular hours. Also, profits are only counted if a position has gained at least 10 price ticks, and there must be a minimum of 30 seconds between opening and closing a trade. All in all, Trade the Pool offers strong trading conditions, competitive spreads and commissions, and a solid and user-friendly platform, decent buying power, and swap-free accounts. So we scored their trading conditions 4.5 out of 5. Finally, payouts. How quickly can you actually get your profits? Payout splits start at 70% on all challenges. The minimum withdrawal is $300 after the profit split. The payouts are processed every 14 days. Fees are set at 2% for Rise crypto and bank transfers. In terms of real-world results, our team found plenty of payout updates on the firm's official Instagram and Twitter account. However, there's still no independent third-party verification of these payouts. For funded Flex accounts, there's one requirement before you can request a payout. You need to make at least 0.5% of your initial buying power in profit on 3 separate trading days within any 14-day period. The days don't need to be consecutive. Overall, we rated Trade the Pool's payouts 4.3 out of 5. Before we share our final thoughts on Trade the Pool, here's why our opinion matters. Our team is made up of experienced prop traders and market analysts who have spent years in the industry. In the past year alone, we've reviewed more than 40 of the industry's leading prop firms. This gives us a clear sense of what a truly great firm looks like and what should raise concerns. So the big question, should you choose Trade the Pool as your prop firm? Let's break down the pros and cons. These are the key advantages we've found. Most importantly, Trade the Pool is the only stock-focused prop firm out there, so their offering is truly unique. You get access to more than 12,000 stocks and ETFs, which is far more than most firms offer. The Trader Evolution platform comes with advanced tools, and automation is supported through Signal Stack. You also get a free data feed. Account growth potential can reach up to $450,000. There's no PDT, pattern day trader rule, and shorting small cap stocks is allowed, which many prop firms don't offer. Now, a few things to keep in mind. There is a consistency rule, which may limit flexibility for scalpers and algo traders. Minimum trade requirements include a 30-second hold time and at least 10 cents profit for a trade to count. And the 70% profit split is slightly below what some other firms offer. So who is Trade the Pool best suited for? It is a perfect fit if you want to trade real stocks rather than CFDs. It also works well for news traders who want to react to volatility, swing traders who need weekend holding, and automated traders using Signal Stack. If you want broad market access, the ability to trade across 12,000 instruments is a big advantage. And day traders or scalpers will appreciate the competitive spread and commissions. All in all, we gave Trade the Pool a 4.5 out of 5, a strong, above average score. If it does sound like a good fit for you, make sure to check out the link in the description. It will take you straight to their latest offers. If you found this video helpful, give it a like and subscribe for more trading reviews. Thanks for watching, and I'll see you in the next one.